Good morning and welcome to the Quantum Leap Futures Morning Leap session for Friday, February the 16th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. Our hypotheses are our trade plans. We do not know what the market's going to do. Therefore, we create multiple plans based on what the normal auction should look like. And then we have two alternative plans, which is our expansion days. Lately, most of our hypos are playing out to the expansion side due to the fact that our daily full session average true range is increased now to 59.44. That's incredible, considering that we were under 10 not 60 days ago, thereabouts. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, then we do the live trading analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday. Yesterday, our main hypothesis was a open auction out of range, a move back to test the range high, and then somewhere between to test the half gap fill, the 2707 area, which was also the overnight VPOC. We were looking for the gap not to get closed because of the fact that we were above a 15-point gap, which gave us a very low probability. But in this environment of high volatility, the low probabilities seem to be playing out more and more. But we were looking for responsive buyers to step in, and then we were looking for a balancing day to trade, and go sideways as we balanced above the prior day range. Hypo 2 was an open test drive and a move up into this 41 area. We were looking for a gap and go continuation day. And then Hypo 3 was an open auction out of range, failure to take out the overnight high, which was at the 1950, and rotate us down into this distribution, base down here, and start to work our way back up and basically fight the high. So we got a combination of 1, 2, and 3, and that's why I put the levels on, because the levels give me, our trade levels gives me the if then that scenario, where if we break above or below a level, then it's likely we're going to go hit the next target, and then I can adjust my plan accordingly. So we opened auction out of range, and they came down and they closed that half gap and came back to the Globex VPOC pretty quick, and they left the overnight high alone. And I talked about this in the live room yesterday, that once we got back inside and we came down, usually I'd be looking for a bounce off of the 97, and I told the room that we're more likely to come down and take out the overnight low and come down and test the 88 level and possibly down to the 86. Remember that I talked about, you can go watch the video from yesterday, I talked about this 88.50 level. If we got below the 88.50, then we are actually going to violate the trend on the daily by breaking below the 20 SMA. So this level played out to be key, and then we rotated all the way back up, broke outside of the prior day range. We held the prior day range. At this point, we were talking about that we're likely to see a neutral or neutral extreme day if they held above the prior day range. Why? Because of the fact that we've been seeing a lot of these with these large ranges. We've been seeing a lot of neutral days and a lot of neutral extremes. And what did we do? Came up, put in the neutral day, came back, held that that trade level and the what was then become the VWAP and the midpoint at the '09 level, and we just ground up into the close, went up and didn't quite get to the target. We did have a target at the 2675. 27 area. We were looking for the move all the way up into the 41. Remember that if you look at the Globex, this move down off of the 28.75 and a quarter to the 25.30 and a quarter, the 61.8% retracement is there at the 27.43. And that's why we're looking for the 41. More importantly, that this micro composite where they found value for the gap up and go to the push to the new highs, the VPOC, the micro composite VPOC was 47. We closed at the high of the day. We said that we're likely to get extension into the Globex, and taking a look at the Globex, we went up, and look at where we went. We went right to that 27.4675, one tick off of that microcomposite VPOC, former microcomposite VPOC. So inventory overnight is, it was mostly long, but we've come back down, and we just put in a new overnight low. Our low was down here at 32.50 for most of the night. A lot of cortosis around this 35.50 area. We just chopped around that area forever. Then we tried to go up and break and hit that 41 level. They came back, put the overnight low in, which became a weak low, and then we started grinding our way back up, and then as it usually is a lot of times, the Globex high put in a Mr. Sneaky and then rotated us all back down, and we just put in a new low. This is a weak low down here. I'm expecting we're back inside of yesterday's range, so I'm expecting this to probably get expanded out. But let's just back up for just 1 minute. Let's take a look at the news for the day. We did just have housing starts. We had building permits. They came out better than expected. Export prices came out better than expected. Housing starts came out better than expected. Foreign securities in Canada was just dreadful. The news didn't really get much of a pop, so they're not reacting to it. News later scheduled. We've got the Michigan consumer sentiment and expectations. Then we have weekly ECR, weekly annualized. This doesn't really do much for the market. And then we've got the Baker Hughes rig count. That's all the news that we've got on the day. So not a lot of news. Just stepping back, I always do this every day. It's a good habit to get into. I look at the macro. I use a simple candlestick chart. I start on the monthly. I use a 9 EMA, a 20 SMA. What I'm looking for is where are we in each time frame in terms of the trend. Do we have good slope and separation? Is price paralleling the 9 nicely? Is the trend strong, or is it getting challenged by breaking below the 9, or is it getting violated and possibly changing the trend on the 20, breaking below the 20 SMA? 14 months of one time framing up. We did come back and test the 9 EMA, got below it, but popped right back up. The range is just incredible. What is the range? It was 308. It expanded again. Let me just, I just want to check it 1 second. Give me 1 second. Our monthly range is, no, it hasn't expanded, 308 and a quarter points. That's incredible. But the overall trend is up on the monthly. So we've got repair work to do. That pullback that we had was basically a normal correction and a pullback. Going to the weekly, you can see that we did, try to break below the 20 and violate the trend, but they took it right back yesterday, and we're coming right back up to get back above the 9. Watch this 27.23 today as clues, of a possible push back down to test the 2600s again. Going to the daily, our daily, we were breaking down. We had slope and separation to the downside. We were holding below the 9 and the 20. It looked like there was possibly going to be a change of trend, but they took it back, and now we're coming up and testing the 9 EMA from above, from below, I should say. So watch this 27.55 for possible start of a move back towards that 2800 level. And then going to the intraday, you can see that we had this downward trend off the high. They tried to take it back and then failed, put in a lower low, and now we're back above the 9 and the 20, and price is moving up. We are losing a little bit of slope here. So the 9 EMA right now is at 27.26, but I'd be watching the 20 down here at the 26.99. Going last but not least to the 30-minute, you can see that we were trending up. They stalled out. They came down. They bounced, put in a Mr. Sneaky, rotate this down, and now we've got possible trend change on the shorter time frame, and we're seeing some weakness coming in as we move towards the RTH open session. Taking a look at the structure of the market, from the gap update on the October the 3rd through till today, our most traded price, or our volume point of control for the longer term micro composite, is down here at the 2780 75 area. This is very hard to read because the scale and it looks really really thick, but it's only because of the range. You can see that we broke out. We have a hammer here, and hammer rules will come into effect today. So if we get above and hold above the prior day range, that is a positive signal, and look for continuation back up to that 41 for the naked Deepak, the 41 area, but I'm still targeting that 47 area and the 61.8% retracement in the RTH. We did it in the Globex. We're likely to do it in the RTH if we can get above and hold above the prior day. Key levels to pay attention to: the value area high. How can I do this easier? Sometimes it gets a little bit convoluted on my charts here. You can see that the value area high of this smaller time frame micro composite, the 11-day, is right here at the 15-16 area. The LVN, CLVN right here is at 18 with a target down in the 12 and the 9 area. So I'm going to be watching the 18 for a clue, but really got to wait to see if we get below the 16, and then we're likely to come down and trade into this wick right here and start filling in this auction and move back towards this 26.8675 area. So it's a lot of repair work to do above, but we've made a big move off of our range for just the week alone is 126.75. That's a big range for a week. Usually that's a monthly range. So let's start taking a look at we are making new lows here. Take a look at where we are in terms of our overnight numbers. Our overnight high is up at 46.75. Our 47 is a target. Because it's the microcomposite VPOC. Our overnight low, well, we're making new overnight lows. So currently, right now, it's down at 28.50, which just happens to be on our value area high from yesterday. Our VPOC is not likely to get a change now. It's at 35.50. And we have a LVN here at 38. That'll become a trade area. So hard to scale this when the range is so big. And we just put in a new one right here at the 30.50. All right, so that's basically all I really need from the Globex. The VPOC, did shift up to that 40 area, but we've got the naked VPOC at 41.50, and don't forget that the 61.8 is at that 43.75. And we are putting in another low, continuing to move this down. There is a little LVN here at the 21, but I'm watching that daily moving average at 27.23. $23.50 to be exact. And then that's all we need from there. Just bring this up right here. Our key line in the sand is going to be the 18. What do I mean by that? If we get below that, I'm looking for a much bigger pullback towards that 11 and 09 area, and the targets there will be the 15 and a quarter, the 11.75, and the 9.50. Value area low, I'm going to actually go a little bit lower and go to the 04.50. And then below the 04.50, the 2675. I'm sorry, I'm on the wrong scale there. Let me just do this properly. The ranges are getting so big. 18, the 975, the 04. I knew it was the 04 level. I just was looking at the wrong. And 04, and then 2700 and a quarter. Interesting how they're not too unsimilar between the 2600s and the 2700s. Oops. And then, of course, we've got the 94.75. Funny that we're doing such big ranges. And then we get into our, our bigger extended targets. So daily ATR, full session average true range is running at 59.44. So off of the high overnight, our daily downside ATR target is all the way down at 26.87 and a quarter. Our week open was 26.28.75. Therefore, our weekly critical mass today is all the way down here at 26.89 1/4. If we get below this level, do not try to fade that, okay, to the long side, because we're likely to see the buyers capitulate and move, lower towards the year open down here at the 26.75. I mean, year open was 75.75. How did that get moved? All right, now we just put in another new low at 26.50, not year low, overnight low. So I'm going to adjust the upside because the upside was higher at 91.75. So 26.50 plus the 59.44. Our upside daily ATR is 27.86. So just remember, we have range capabilities right now in this volatility, all the way up to 86 and all the way down to 89. Amazing. All right, so what is my hypothesis? Well, the trend is up and the hammer rules are in effect. So what I'm looking for is I'm looking for an open auction in range. I'm looking for a move down to take out the overnight low and come down into this 18 area, find buyers and rotate up towards the overnight VPOC at the 35.50 and up, targeting this 41 area and the 43 to 46 area. I'm expecting the possibility that we get both the overnight high and the overnight low taking out in this environment. So that's hypo 1. Hypo 2 is an open auction in range, a push up to close the gap, a false breakout somewhere between 35 and 38, possibly even 40, finding responsive sellers, rotating us 41.50. I mean, rotating us back down into the range and basically chopping down here between the 2700 and the 2730, and just cleaning up this auction down here, but not looking for a lot lower than that. Hypo 3 though is an open auction in range, failure to take out the naked VPOC, come down, chop around in the 09 area, then fail and push down towards this 87.25 and possibly down to the 26.75 and test the year open coming into the weekend. It is a holiday weekend. Monday is our family day. I guess it's your President's Day. So the markets are open. The futures markets are open, and the other markets are open only till noon on noon Central, I believe, on Monday. So you could see some people taking some long weekends. So the volume could drop off this afternoon. Hypo 4 is a continuation, a failure to get below the 18, a move up into the 41, chop around in the 41, and then push up towards that 62 level. And those are my hypotheses for the day. Just remember, we're in a high volatility environment. They are showing some weakness. We just put it in. Did we just put in another new low? Yes, we did. I hate when the market starts moving when I'm doing my homework. So you just be careful. It's Friday. If you're struggling, just keep it tight or just take the day off and go into the weekend. It's terrible to go into the weekend with a losing day on Friday because there's nothing you can do about it till Monday, and especially with Monday being the holiday. So I always recommend if you're in a good profit for the week, go tight and light, as I've been recommending in this environment with the volatility. If you're a retail trader and you can't sit through the average range, the average rotations right now are running 6.25 just in the Globex. They are running over 9 points in the RTH yesterday. So just understand that you know you got to just lighten the number and keep your risk really tight and increase your frequency if you're going to trade. Go down to a one lot and try to get 2-3 points at the max. Anyway, that's going to complete our pre-market session. It looks like we have a zipper measured move coming into this this RTH. Let's just measure this here because it is a valid one because it did get put in. It will be invalidated above 33. Come on. Close. The primary target is 2350, and look at that. 2350 is one of our targets and a key level for us. That's that 20 SMA target. So 2350. So interesting how those things play out. Anyway, trade well, trade safe, and we'll catch you on the flip side.